quite late, I know, so we'll make it quick. We'll do the Q&A slash backtesting tomorrow. So if you want to get a bunch of questions off, that'll be answered tomorrow. So save those. Anything pertaining to today, we'll call fair game. But I'll just do a quick market review for today, and then I'll get you out of here. So, obviously, as everyone knows, we are near and approaching and probably past on some of the asset classes all-time highs. Okay. As we start, I want to remove any psychological bias that you have about the all-time highs. All-time high conditions is something that you have to understand. You also have to prepare for, because we will be at all-time highs almost every year. We'll approach them or interact with them, preferably, obviously. And during your trading career, we're going to have to trade into all-time highs as long as this market is still here. So you need to have a protocol. You also need to have a kind of, not expectations, but a game plan for understanding how all-time highs work. You do not want to pick tops, okay? You do not pick tops in your all-time highs. And you have a very kind of soft bias that we're going to keep going up until it clearly reverses. Just like any other profile and any other day, you trade the trend until it's obviously reversing. And you'll know that obviously by the signatures that price shows you, but you do not try to pick, oh, okay, it's gone up too far, it's got to drop back down, or, oh, we took out the buy side here, we have to drop back down into discount. You don't do that. It's going to keep going up, and you treat each individual day as its own, and you get a bias as you normally do. And if it keeps pointing up, well, then by all means, I'm going to still look for longs, right? It's actually an easy bias, because all you do is you walk into it and you already have a kind of you're already predetermined to go long, and you look into it on the 1 hour 15. If it shows it's good, boom, you got an easy bias within 5 minutes, right? So don't fear it. Don't think, oh, I hate all-time high conditions because I don't have any buy side liquidity. It's just normal price action. All right. It doesn't matter if we're consolidating at all-time highs, at all-time lows. Price action is price action. All right. So I want to remove any fears or psychological biases that you have. Obviously, watching this video in the beginning, that's the most important psychological thing I can give to you, because if you try shorting it in these kind of conditions and you think, oh, it's gone up too high, you're going to get destroyed. So let's get that out of the way right at the start. On the higher time frame. So for this week, it is probably the first week I think I've seen in my trading career that we have NFP on Thursday. And that's because we have July 4th, which is a bank holiday, and a US holiday on Friday. So normally it doesn't land on a Friday, so you don't have this kind of weird NFP week. That being said, normally in terms of seasonal tendencies, as we get deeper into summer, so July and August, we have consolidation reversal profiles during these kind of weeks and months. Now, we just left a consolidation range, so I don't think that we're going to have a consolidation reversal profile every week. But since it's NFP week, we got to be somewhat careful as we approach this entire week. Now, Wednesday, I don't really know how Wednesday's going to play out, so I'm going to be very careful and maybe sit out on Wednesday. Thursday, we'll have to see if there's anything good. I really don't really know what to expect in terms of the price action this week, so I'm taking it day by day and not trying to force any weekly profile as of yet. All right, so as we look at the 4 hour chart, obviously this is what I was talking about, where you have manipulation with news over the weekend, the bombing of Iran. No, I'm not trying to be mean or anything, but that's literally the news driver. We expand up this D on the 4 hour chart, leaving the consolidation range, and then we start to expand, right? And just start climbing. It was literally 1,000. It's a 5% move in a week. Quite a large range, 1,240 points within an entire week. So that's going to create that psychological thing of, oh, we got to go back down. Don't do that. If it shows you it's going to go back down, it'll show you. You play that continuation until it wants to reverse clearly. All right. So as we look at this morning, we have a 4 hour inefficiency being traded into. I don't need to see what's going on the left side chart for me to get a bias. If it's trading up into there, it doesn't matter to me. We're still looking at what's given on the right side of the chart. So we got an inefficiency here. You can drag it to the VI if you want. Either way, inefficiency, order block. You can mark from the wick if you wanted to as well. Either way, got displacement through a swing high, order block. I think that's pretty textbook bullish bias. I don't think it gets cleaner than that normally. So for the week, okay, and potentially for the day, we're expanding up. Tomorrow we have news. Today we had no news. It's also a Monday. Given its NFP, so it's going to be medium to low probability based off of that kind of profile, but let's see, right? So as I walk into this, what's the bias? What's the price action? I'm going to walk you through exactly what I was seeing as I looked at it in the beginning, and as the day progressed, what I'm anticipating, and how you can kind of get the same feel for price, and know when these days are going to come. So on the higher time frame, in terms of the weekly perspective, okay, potentially we're bullish, right? 4-hour chart looks pretty healthy. In terms of the day, okay, the higher time frame is pointing higher. Preferably, you want the week, the day, and the session all to be lining up towards the same draw. Then you get the easiest low resistance liquidity runs towards your draw liquidity. It's much harder when you have the week pointing down, the day pointing down, the session pointing up, or vice versa, where you have this kind of conflicting arrows. And this is where you have high resistance price action or swing to Z kind of profiles. So this kind of price action is normally what you see in consolidations, where sometimes you don't even have a weekly profile or a weekly direction. Sometimes not even a daily direction. You're left with just a session. That's what you dealt with all in here, right? Okay, where's the session going? You figure out where the session is going. You take it from session low, session high, if you can. Find a scalp in there, and then really that's it, right? We're kind of just stuck within there. Now, since you got the week lining up and the day lining up, it's a little bit easier. But you still have to have the same kind of hesitant approach and cautious approach each day as you approach the market. So, okay, weekly, potentially daily is looking bullish on the 4-hour. Let's drop to the 1-hour to see if we have that fractal kind of move, right? 1-hour chart, come in. This vertical line here should be delineating midnight. There we go. Minute opening price. Okay, let's read price from midnight onwards. I don't want you to look over here because that's what happened. Read price onwards as we were to watch it almost coming into 9:30, right? Okay, you got a gap here with an order block. Inefficiency, obviously, in discount. Now, I would prefer if this is left open as a breakaway gap in a best case scenario. Why? It's on top of a balanced price range. It also is on top of that 4-hour gap as we have here in the inefficiency is the IRL, and that was a bullish order block. So it shouldn't preferably fill this gap at all, or if it shouldn't really come down and fill it completely. So I expect if this week is bullish, we leave the new week opening gap unfilled. So as we come into it, going to 9 a.m., what do we have? Okay, well, displaces up, turns back down into this inefficiency, and it fails to displace after midnight. So we got a gap being traded into. Let me zoom in here so you can see. Gap being traded into. Okay, do you have SMT at the bottom potentially? And then no displacement here on the 1-hour chart. Okay, so at this point, it's much harder to argue, okay, the 4, the 1, the 15 are all not lining up. So we got to kind of do a little bit more in-depth understanding of what's going on in price action on the 1-hour chart. And then obviously as the 8 a.m. candle prints and drops down here, now you're at kind of a crossroads, okay? Anytime you see a reclaimed inefficiency being used, it's already some flare should be going off, as well as the fact that, okay, if we were truly bullish on Friday or on Monday here, we should have a nice quick reaction to this gap and then boom, displacement away, just like how you saw in here, gap being traded into and then leaving it quickly. I want to see that same exact move here. So I know, okay, we can look for longs coming into the AM session. We don't get that. Wick, 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 wick. And all the candle bodies are telling you the story where this lethargic movement coming back up. Okay, as you go to the 15-minute chart, you'll see exactly why I would prefer, if anyone who's new or even intermediate looking at this price action, this is exactly what's going to tell you I should probably sit out, especially with the week going forward. Okay, you got Tuesday potential setup, Wednesday potential setup, even maybe a Thursday potential setup, even it just being a Monday, regardless of the NFP week. There's no reason to be forcing something, okay? If this kind of conflicting data is showing up, especially it being early in the week, there shouldn't be any need to force a trade, nor should you be looking for and freaking out if things are going bad and now, okay, I gotta get a bias. Don't do that. If it doesn't look good, you don't like it, there's no problem with that. But the 15-minute chart, this is what, to me, visually, if I had to say this is what bad price action looks like, visually, this is the best way to look at it. certain our indicators here. Just keep it off for a second. Notice coming into 930, the low resistance buy side, as well as the low resistance sell side. There, and also even over here, right? Whenever you see this profile, or not this profile, but this market condition, to me, it's much harder to say, yeah, this is really smooth, right? You want to see one side jagged, one side smooth. We purge liquidity on one side, or we're already trying to purge liquidity, and now, okay, there's a very smooth, low resistance, relative equal, whatever that we can target. In this case, you don't have that. You got relative equal highs, relative equal lows. You do have SMT at the highs, but what was the 4 hour and the 1 hour potentially just saying? Okay, we're bullish. Now the 1 hour and the 15, if you got the SMT marked out, okay, now we're potentially bearish. So already you have this misalignment of the week, the day, and the session. So you're not going to get a daily high to low. You're not going to get a weekly high to low on this kind of day. So immediately after that, you're left with, where's the session going to go? Okay, where's the session going? Can we also figure out all of the different lower time frame criteria that it's going to help us obviously in a trade, but also the management of that trade and the expectations if we were to get a setup. All right. As we're getting the session, you look at 930, we look at actually the profile we're getting here. You get the high being formed post London, and then you've got Asian session, London session coming back into the range. Also, what are we trading towards? What is our target? You could say Asian low here, but in terms of a 1 hour chart and a 15-minute chart, are we targeting an ERL, external range liquidity, or internal range liquidity? Sure, this may be a sell side pool, I agree. But as we look at the 1 hour chart, as we look at the 4 hour chart, even the 15, what is this? A discount and efficiency. And this is also internal range liquidity. It's internal from this high and this low, right? So that's internal range liquidity. Okay, so now we're moving into IRL. We're going from ERL to IRL. Okay, that already should be pointing out something. We have low resistance on both sides. We have no news today with news tomorrow. What kind of profile would you expect to show up on a day like today? Swing to Z, right? Generate liquidity before the news, or potentially just consolidate in terms of a daily or a weekly session, right? What is the start of the week going to do? Consolidate, manipulate, expand. AMD, as you know. So this, to me, although we move down, we move up, where does it close? It closes right back where we opened, right at midnight. So this is a consolidation day, and you look at, okay, the fact that we don't have these things lining up, we're trading back into an IRL. We have low resistance kind of on both sides of the market. What do we expect? Swing to Z. All right, so now if we're expecting a profile, not expecting, but based off that data, we can deduce, okay, it's most likely going to be swing to Z. And if we were even to look for shorts, would it be wise to be holding it to the new week opening gap or even the sell side pool at previous daily low? Probably not. Because of the fact that we're poised to go higher in terms of all-time highs, and this is probably going to be a counter move for another move higher tomorrow. Even if it doesn't do that, that would be the expectation. News, okay, what do we do? Accumulate or manipulate prior to the news so the news can expand. So, okay, you got a swing to Z profile. If you've seen, if you're in the PDF group, if you're in my private group, if you are watching the videos on YouTube, you know, okay, swing to Z is the lowest probability profile of the three. And there's rules of engagement. You get in early, you get in late, nothing in the middle. We are going to form a low or a high. We're basically going to form a low, form a high, and then stay within that range until time of day. What time are we expected to then leave that consolidation? Or what time is it going to consolidate to, I guess is my question. If you know, you can put it in the chat. Lunch, exactly. So 12 p.m. From 10 to 12. This is 2 to 5. This is 7 to 10. This is 10 to 12. Okay. So you either get an early move, you get a late move, or nothing in the middle, because in the middle it's going to consolidate. So what is going to be there as a volatility injection every day, despite the news? Monday, Tuesday, Wednesday, Thursday, Friday, no news, 8:30 news, 10 a.m. news, whatever it's going to be. What is going to be there as a volatility injection? 9:30, right? So on these kind of days, I favor a 9:30 trade, or maybe something very late like a last ditch macro, or even a 11:50 macro, because that's normally when we're going to start to leave that consolidation range. So and for an entry, if you're going to use 9:30, it may go to that low hanging fruit instantly, and then come back inside the range and consolidate. Sometimes you on swing to Z days you can get a 950 macro, but it's kind of unreliable in the sense of you're either going to get stopped out or you got to hold a trade for 2 hours, neither of which I really want to do. So I want to get into a quick move, even if it offers me a 2-to-1 instead of a huge one. That's going to be normally the best, most reliable, quick, energetic run that you normally see with standard price action. I don't want to have to sit through consolidation, things like that, etc. So, okay, so if we know that, say obviously, so preferably you avoid it. Especially if your model's not to trade 9:30, you avoid it, that kind of day like today. You walk into it, you see all this stuff, you see conflicting data points on multiple time frames. Are you going to get a high quality trade that you can take from session low to session high? Most likely not. All right, so if that's your criteria, that's your filter, you're just taking the A+ setups, boom, you can skip this day and be fine. For those who, number one, either want to know how to trade it or are looking to potentially trade these kind of days, this is what you would look for. Where is, if you know that 9:30 is going to move, where's 9:30 going to go? That's all you're looking. Where's that 15-minute candle of 9:30 going to print towards? And it may not close that way. It may just wick. Where's the 9:30 wick going to go? Last week, we talked about in a lecture, these volatility injections will be served as functions of time, as well as completing and starting a market maker model. Someone probably, hopefully someone recalls me saying that last week. Because I know I did, but especially at 9:30 and 8:30 at 10 o'clock, things like that, you want to see it complete, preferably an MXM, and then start a new one. So, okay, we know that 9:30 is going to move towards an IRL. We know that it's most likely going to have the most amount of volatility in terms of the entire day. We know that that 15-minute candle is all we need to look for. Now we're looking for a specific entry, right? What do we use as an entry model? You could be using the same exact stuff you normally do. I like fair value gaps. I like stop runs. I like SysDs. That's normally my 3. I don't really want to be taking a stop run trade on a day like today. I favor kind of added confluences. So I'd wait for the SysD. If it gives it to me, I'd wait for a kind of secondary fair value gap to be traded into, just so I can make sure it's headed that direction. But as you come into it, if you're going to look for this, okay, where's the 9:30 candle going to go? What's the narrative showing you going into 9:30? It's still going to follow price action, still going to complete the sell model. It's not going to just do something random, right? Price action is coded, so it's got to follow the script regardless. Inefficiency there, traded into order block, holds it, displaces again, past the swing low. That's an intermediate term low right there. What would that be? True market structure shift. Inefficiency, traded into, holds consequent encroachment. Little wick up there, that's fine. Where's it close? Back there, right there. I don't think it would be insane to say, yeah, 9:30 is most likely. I know it's right here, but if you put it right there, I don't think it would be insane to say, yeah, 9:30 is most likely going to drop, even to take London low, right? You could argue that. So that would be the scalping setup towards the lows. You don't expect it to go into Asian low. You don't expect it to even go down into the new week opening gap. If it does that, that's great. But you're looking for a low hanging fruit objective for that volatility injection to run to complete the sell model, and you don't really want to be trading the second half. All right, when you study these days, it does this all the time. So I'm not cherry picking this or trying to say, yeah, look at this and obviously this is exactly what's going on here in hindsight. But when you go back and study all these low probability swing to Z days, this is exactly what's going on. So if you understand that, you have an approach to it, you obviously can switch out and know, okay, I'm going to take a scalping approach instead of a low probability or a high probability approach, or you just sit out, which I think the latter is the most beneficial one. Inside of this, there's obviously more advanced kind of entry models. We can look at the 5-minute briefly, but coming into it, okay, 9:25 closes past this. What's that? SysD, ATM model of doom. right at 9:30. On the 1 minute chart, you got a little bit more advanced kind of entries. Inefficiency there being traded into, inefficiency there being traded into at 9:30. Even on the 15-second chart, you've got a balanced price range being inverted, which is a little bit more of an advanced one, but anyone who's the apt student, you got a balanced price range here, right? You got an inefficiency being traded into with the gap. As it starts to drop through that balanced price range, if it was bullish, this is normally what you see, right? Balanced price range, this is left open as a breakaway gap, trades into it a little bit as a wick, then pops up and would close through this. This being a balanced price range, then it drops through and closes through here. Why would it need to be doing that if it's bullish? So that there could be a stop limit in. You got a break balanced price range being traded into after inefficiencies being filled. Boom, limit in there, stop at the high. You could take it to London low if you wanted to. Obviously, it shifts and drops lower again. Got inefficiency with the first presentation gap right here. Same price action. I just switched the chart. First presentation gap trades into there, drops back down. You got a sisti on a 15-second chart right here. Inefficiency, boom, 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 drops. Actually takes out the Asian low. And then at what time does it form this out? Okay, right at 9:51, right at the macro time. Right, macro time. Like I said, you could take this, but then you got to hold it for 12 o'clock and after. And actually, you get stopped out here. It doesn't even go to the take profit. You probably have SMT up there or something, but very just tough trade to be in. And a lot of times you're not going to be able to see this as, oh, we just dropped here 9:30. Let me take this weird inefficiency that's going to be much harder to take. So, and obviously the resulting price action, I don't really care about it. You have this weird spike. What I don't know, Trump is speaking probably here. Great. Then you got PM session silver bullet with a macro unclosed, just running up and taking out the buy side from current day, seek and destroy kind of profile, right? And then boom, it closes back into where? The midnight opening price. Gem of the day. Midnight opening price on a swing to Z day is your draw on liquidity. There you go. Also on a silver bullet, what's it called? Seek and destroy. Same exact thing. You want to be looking for that midnight opening price as a kind of almost as a first presentation gap. It's going to keep tagging that over and over and over again and want to draw back into it. Why? Because when you think about a consolidation day, it's going to print like this. It's not going to print like this and print up, right? It's going to print where it's going to open and stay and close right where it opened. So, okay, the midnight opening price is probably where you can using as a draw back inside the range. All right. So I don't want to make this too long. It's already been 22 minutes, but hopefully that's a good explanation for price action today, and why potentially you shouldn't have been trading, or potentially how to look for a setup today. Tomorrow, I do think it's going to be slightly better. You do have news. Powell is speaking at 9:30. My take on it, he's speaking on an international scale tomorrow. If you ever want to go back and look, what is he talking about? Go to Forex Factory and click on the information on the news. It'll tell you what's going on. So when Powell's speaking about some international thing with multiple other people, do you think that's going to have the same effect of him standing up in front of the entire America and talking about the US dollar? It's not. That's my look on it. So I don't think tomorrow is one of those days where, oh, Powell's going to jack up the whole market. He could. So I'm still going to keep that on the board. But I look at tomorrow as 10 a.m. news is the major news. So let's see what goes on at 9:30. If it starts to be weird, then I'm going to skip it. If 9:30 just looks normal, okay, 10 a.m. may wait for 10 a.m. to send or not. Normal approach for me tomorrow. You just got to be slightly hesitant about Powell speaking. All right. Flux is a normal that I'm starting to have my best months trading while rarely thinking or stressing about it. By this, I mean that I'm obviously still journaling and always improving my model, but I feel myself thinking less and worrying less about trading in general. I know what to look for and what not to look for, and that's it. I think it's messing me up because I'm not used to doing my best while putting the least work. It's 100% true. That guy, Randall Howe, talks about the work in trading is patience. The work in trading is not doing any work, really. It's about being patient. It's like, the jaguar or the panther analogy, where the panther literally sits in the tree all day, does nothing, And then as soon as he gets hungry, he stays in that tree and watches the gazelle go by. As soon as that gazelle gets right underneath the tree, pounces, gets on it, drags it back up into the tree and eats it. It does that. It requires the least amount of work, but somehow it survives. So in trading, as you progress, it's the same exact thing. You don't put in any work. You show up, you skip days, you sleep in, and on the days you do like it, you probably are taking the same setup you always do, and it's boring, right? It's boring. You're just like, you show up, you take this, you set up, win, lose. You're like, okay, what am I gonna do, right? You just carry on with your day. That's what it should be. It should be like that. It should not be. Look at this. I'm not saying it should be boring, but I'm saying like when I wake up, I still like trading. Like the reason I get up in the morning, when the market's still there, I don't. It's not like when I have to go to school, and you're like, bro, what? I'm not trying to do this. Like trading is still fun, but it's repetitive. So the excitement from it definitely leaves because you know what's going to happen. You know what's going to go on. Win or lose, it doesn't really like what's it going to do, right? You win, you learn, you lose, you learn. And at the end of the day, you're probably still going to be consistently profitable, right? So you don't really have to stress, right? That the risk management is like a safety net for you. It's, okay, as long as I don't break that safety net, and this is the parachute that I built myself, I can't fall, right? So even if I know if I take 5 losses in a row and I'm just cutting my risk, boom, it's not going to be a big deal, and it's just about being consistent at this point. Which consistency at that point, it's almost easier to be consistent than it would to break your rules. So 100%, I think if you're getting to the point where it's almost boring, and you're like, okay, I'm still journaling, I'm still improving, I'm not being lazy with it, but it's going to be the same. That's a very good progression, because that's what it should be, and it sometimes isn't stimulating enough. So that is where it can get problematic. I fall into this trap myself where it gets almost too easy. And then what happens is you get overconfident. And then you're like, oh, yeah, this is easy, whatever. And you start half assing it, or you start doing stuff that you shouldn't be doing, like taking free trades. There's a problem that I had, and I sometimes still have, where I'm like, oh, I can see where it's going. Let me put this trade on. I'm already up whatever on the day, 5R on the day. Let me just take this trade. And then it's like, why would I do that? Because even if it ends up winning, it's not a high conviction trade sometimes. And even when it's losing, why are you risking that? And it's like that part where, okay, you still got to be on the top of your game, still making the right decisions, still journaling and everything, but making sure that you're not taking the lack of something, the boredom, and becoming a 7 out of 7 bastard because of it, because you just want to take a trade just to feel something. Don't do that, right? But otherwise, as long as you're staying vigilant, you're staying aware of your conditions and aware of the surroundings, and aware of obviously your mental state, you're not getting overconfident, 100%, it's exactly what you need to be doing. All right. No problem. No problem. All right. So I said I wasn't going to make it too long. So if you got any questions from today, you can post them up quickly, but we'll do the Q&A / backtesting session that we normally do from the weekends tomorrow. So bring any major questions there, site questions, things like that, and get those answered there. I see one person typing, so I'll let them finish. But this recording will be posted probably tomorrow. I still got to eat dinner. I didn't even eat dinner today. I was out for a while, so I got to eat. And I'll probably post it tomorrow at some point. And if I don't, someone remind me. So, anyways, yeah. Hopefully it was insightful. And obviously, if you have any questions from this or from the day, shoot me a DM. I caught up with them, but I got more I got to answer. So I'll catch up to those by tomorrow. Sound good? So get some rest. Take care of yourself. Journal if you didn't already. Study the price action. This stuff is extremely good to learn from. It may be bad PA, but if you learn it, you don't understand it, it follows the same script. It's just a different one. It's a low probability script, right? It's not going to change from that. So take care, and I'll talk to you guys soon. Peace.